Hello and welcome to another update video about Solana, which is currently coming down further. Yeah, we had this sort of descending broadening wedge on the chart. I think this is morphed into more something like a channel, maybe even descending wedge. Yeah, with contracting wedge basically, and not expanding. So that gives some confidence because these wedges, they often appear towards the end of a correction. Now let's see. I mean, it's never a guarantee, right? But when you have something that's contracting and going down, it typically indicates that the downward and downside pressure reduces. But let's see. I mean, current price action would suggest still another low. Let's see. I mean, let's see. Today at 10 a.m., I think it is 10 a.m. Eastern time, we've got consumer confidence in the US that might trigger a little bit of volatility. It's normally not too relevant for crypto, but sometimes you have these correlations and it might, it's sort of the trigger I think the markets are waiting for today. Either way, we already talked about it yesterday here, the 1-2 setup, the yellow support area is relevant. After Solana, I think, maxed out or even invalidated the previous box. Yeah, so we had the idea that it could have been a 1-2 setup, or just a wave 1 with a large A wave, an overshooting B wave, and a C wave. I think that is much more relevant. Talked about that yesterday already, but it doesn't really change the higher level assumption at all. So it's more like that I'll be looking at here. Very clear 3-wave move to the upside, and now a possible ending diagonal in a C wave to the downside. So if we, there's a few things we can do now. I mean, this is still the relevant support area. It needs to hold really the $17 level, or let's say, $17.30, because a drop below that, or let's call it a sustained drop below that, which means dropping below it and sustaining, consolidating below support, that would really threaten a bullish breakout scenario from here in a third wave. But if it happens, I mean, it's decent reward to risk. There's never a guarantee these work out, but it's all about reward versus risk that I think wins the marathon in trading. So we talk here about roughly $30. I mean, that will shift a little bit as a minimum target for that third wave, depending on where we have that support, right? How low do we actually go? So this is relevant support. And let's just double check the retracement of the B wave here. That's something I think I haven't done actually yet, but it sort of gives a bit confidence that this could really be an overshooting B wave, but it looks all right. Yeah, I mean, it pretty much reacted to the 1.38 Fib retracement. That is sort of the level that is normally the maximum you would expect for an overshooting B wave. And you will note it spiked above it, but it was not a sustained break. I mean, it's not like invalidation or anything, but it stayed below that level. It didn't sustain or it didn't break and sustain above the 1.38 retracement at 23.50. It basically got stopped, came down. So yeah, I think having an overshooting B wave, looking at the structure, 3 waves makes sense. From that point of view, if we look at the C wave to the downside now, we need to be able to identify in an ending diagonal 5 waves. Now, in an ending diagonal, each wave has 3 subwaves. So we can look at possibly counting this. I mean, this is certainly a possibility to count this move down as a wave 1, wave 2. And here it's all about, where do we, this could be a 3, here a 4, and a 5. Yeah, so let me add that. Bear in mind, we're on a pretty small time frame here already. But this is sort of something that would make sense. Nice ABC in 1, nice ABC in 2, ABC in 3, ABC, yeah, and now a wave 4, shallow, and the wave 5 could hit the 50% retracement and then take off, or it could go down a little lower, but ideally it's shorter than the third wave, right? So, I mean, there's a good chance it will turn around eventually, but of course nothing is guaranteed. But that's sort of the pattern I'm watching. Typically when you get these breakouts of these wedges, the first target is the beginning of the wedge. Now, it's not entirely clear to me, but I would call the beginning of the wedge the high of the wave 2 here. So we talk about 2280. That's sort of the first target. And they really very often break to the upside. I mean, it's never guaranteed, but they really tend to break to the upside, these descending wedges. Ending diagonals. And yeah, that's the situation. And the problem if we have an overshooting B wave is always that it's either a so-called expanded flat where the C wave will end below A, or a running flat where the C wave will end above A. And that's what makes these structures so incredibly difficult. We can use the Fib extension tool just to measure the target for the C wave. So we're looking here at the 1.618 extension. Okay, so 1843 might be a really, really good support. The golden ratio, 1840. And then here, 1840, the 1.618 extension. Now that's an interesting one. Good, so that's certainly a level to watch, right? So that's my update about Solana. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.